Hello, hello, hello. Hello, everybody. Welcome to today's live stream. It's the 4th of June, 2 o'clock. Just watching the sort of volume at 2 p.m. right now. Starting to see a little bit of a pushes in some of the markets that I'm watching at the moment. But let me know how you guys are doing today. Let me know what you guys are looking at. I'm taking a look at the US dollar today. We're going to take a look at the volatility index. And we're going to take a look at our commodities as usual. We'll have a little look at gold, see how gold's performing at the moment, as well as silver. Silver has tanked today. But I managed to grab onto a couple of long positions. Whether that will hold or not is a different question. So we'll go talk about that. But before we do, if you are on Twitter or X, come and follow me. I've got a new Twitter profile here, John Talks FX. So if you do want to come and have a little chat with me over there, then please feel free to follow me here. Obviously, as well, you can follow Blueberry Markets on Twitter and X as well, where we provide updates. But if you want to come and have a chat with me, then feel free to come and follow me over on Twitter, John Talks FX. And yeah, so basically I was talking about the taking a long earlier today, about an hour ago. I was looking at trying to get longs in on silver. We had a huge drop in the European session, so I like the idea of potentially trying to buy that back. We've gone in very low risk on this, basically looking to see if there is a bounce from a key support zone, but we will be having a look at that in a moment. So who have we got in today? We've got Suba. Welcome to the stream. I hope you are doing well. CG as well. I hope you're doing well too. Let me know what charts you want to have a look at today. Suba wants to take a look at dollar CAD. Yeah, so dollar CAD's definitely going to be in focus for us. If we take a look at the economic calendar, we've got the CAD overnight rate and rate statement coming out tomorrow. Big day. Are we going to see the Bank of Canada cut interest rates by 25 basis points to 4.75%? Obviously, this is what the market is trying to look at the moment. We're seeing a lot of CAD weakness coming into the market. I actually like CAD Swiss short players this week, and that seems to be doing quite well at the moment. CAD yen as well, we'll go take a look at, because that market is also down quite significantly today, down around 1%. So we'll have a little look at CAD yen as well. But dollar CAD, the big one, obviously, we've got some dollar data coming up in the markets as well. We've got ADP non-farm employment change, as well as NFP towards the end of the week. But we've also got this data coming out at 3 p.m. We've got the US JOLTS job openings coming up also. So we will see a little bit of volatility on the US dollar around about that 3 p.m. Who else have we got in then? So Tabo, welcome. Hope you're doing well. Joffrey, Azalano, sorry. Dollar yen we'll have a little look at as well. Yeah, so let's go take a look at some of these charts. I'm going to kick it off with dollar CAD then. Suba has asked us to have a look at that, so I will jump on dollar CAD. Now, dollar CAD, really interesting chart at the moment, building up a lot of sort of volume here between that sort of 136 handle up to the 137.50s. And this 136 handle has proven to be a very good sticking point for the market. I think the last time, we've been talking about dollar CAD, although I am favoring more downside moves on dollar CAD in the short term, shorting from highs has been pretty fruitful. 136 would be the area I would be getting out of those positions anyway, because you can see it's just been acting as support in the market. Now, obviously, a potential rate cut from the Bank of Canada coming up shortly tomorrow, but where is the sort of opportunity for us as traders? Well, obviously, we're seeing a bit of CAD downside at the moment, so the market is looking at more of a chance of a cut. So that tells me that I think the trade is if we weren't to see a cut in the end. Now, a cut from the Bank of Canada is actually priced in a lot less than what we've seen with the likes of the ECB. Around 88% of market participants now seeing that the ECB will cut this week, whereas it's only around a 60% chance for the Bank of Canada. So that's quite an interesting dilemma, because you would expect to see a lot more sort of pricing in if we were to see that those probabilities a little bit higher. In fact, if we saw it more towards that kind of 60 to more towards that kind of 80 to 90% chance, then I'd feel a little bit more comfortable with kind of looking at any kind of longer term positions here on dollar CAD. But because it could swing either way, that's where the risk is in the market. Now, if I'm looking at this from a technical perspective, like I just said, you're probably happy looking in at sort of shorts towards swing highs in here, longs towards that 136 handle. But look at all this sort of volume that is being built sort of down towards the 135s and things like that. So there's definitely a point here where we've got lots of sort of liquidity and volume being pushed into the market around these levels. So will the market go to sort of explore these areas again, or will we see the market just continue to push higher? Now, I think we're going to see one or two things. So if we do see a cut from the Bank of Canada, the likelihood is that the in the rate statement, we will see the Bank of Canada basically suggesting that they're just going to cut now, but then wait to see how the data performs after the fact. So chances of any future rate cuts would be a little bit lower on those expectations, and that could swing the CAD back the other way essentially. So we could see selling towards the event and then maybe some strength coming in on the event, right? And a cut is a little bit more likely. Unemployment rate's up at 6.1% in Canada as well. So that's something we have to take into consideration. Inflation rate isn't quite where I would want it to be in terms of if I was going to cut rates. I would be looking for it to come in a little bit lower. In fact, we can have a little discussion about that because we can bring it up on trading economics. But essentially what we're looking for, if we go to Canada, we can see all the stats here. Okay, so we've got a GDP growth rate. So we've actually seen an increase in GDP. So that's interesting. 6.1% on the unemployment rate, inflation rate at 2.7%. So ideally, we would want to see this a little bit lower. We would want to see this more towards the sort of 2% range. That's where most central banks want to see their inflation rate. So we haven't really got that. So I think it's just going to be a potential cut to then hold. The risk as well could be if they don't cut, right? What if they don't cut? What will happen then? I actually think we'll see a little bit of strength in the Canadian dollar, and that's what's making me think it could drive lower. So two misses that we can talk about really: a cut and a hold of future rates, or we're going to see the market hold those interest rates. Now, if I just pop on a volume profile tool, we can see the volume being built up. It's easily spotted because we can see that sort of consolidation that has been built in and around this area here. Okay, so this is what I'm talking about. When the market kind of builds volume, it can be a magnet for price. So whenever you see in the markets where the market is like moved, consolidated, moved again, and then you start to see it pull back, quite often as traders we say, well, we want to be looking for shorts in and around those areas because that's where you saw that selling pressure come in. That's where the accumulation has been before sellers won. So essentially we can use that to trade back to that bit of a sort of reversion trade in there, and that's what I like to do, especially when looking at higher time frames as well. And that's what feels going on here. We've got this overall consolidation, price has broken out of it, and now we're coming back towards it. This is why the 136 is quite important as well, because it's where all that kind of volume sort of finished, okay, before the buyers really got involved in the market again. So obviously at the moment, buyers are feeling comfortable with defending those positions, and I feel that maybe if the Bank of Canada held interest rates rather than cutting them, then we would see a little bit more downside, more towards that 136 and below, perhaps down towards the 135 handle. Okay, so that's my feelings on dollar CAD at the moment. You know, I like the idea. Essentially, when you're looking at sort of those data drops, you're looking at misses. You know, you want to see where the market is going to miss on those data points, and whether that gives you an edge within the market. But I did like CAD downside short term, and if you are looking at CAD downside, you know, I always say to you, try and find a currency that is stronger. And at the moment, the Swiss franc is one of those. So I did quite like the play of CAD Swiss shorts this week. If we're looking at sort of the sort of play from last week, the market was in this kind of range bound movement here on the daily chart between 0.67, 0.66, and we've breached that now, market moving to the downside. So again, when we're kind of trading these cross pairs, we want to try and identify those markets using the majors. So if we think about it, dollar CAD was at support, sorry. So what does that mean? Well, if dollar CAD's at support and it's going to start pushing higher, it means one or two things: dollar strength, CAD weakness, right? If we go take a look at other markets against the US dollar, including the Swiss franc, what's this market doing? It was at support, but it had broken through it. So that tells me that the Swiss franc is stronger than the US dollar at the moment, and that gives us an edge. That gives us an edge in trading that minor cross pair. Okay, so CAD Swiss looking pretty good to the downside at the moment. Like I said, though, the only thing is, if they don't cut rates, I could see maybe price kind of coming back to the upside here for CAD. But if they do and hold, it could be a little bit bearish for the market. Let's go on to some other pairs of interest then. So Geoffrey wants to take a look at Kiwi CAD and Pound CAD. So CAD, yes, very topical at the moment. And if we take a look at Kiwi CAD first, you know, this market very much moving to the upside as well. So again, if we kind of think of it in terms of what are central banks looking to do at the moment? Well, central banks, if we look at it from Bank of Canada, they're looking to cut rates. You know, it's very evident. We see a lot of reports around it at the moment. It's potentially priced in for a move. Reflect that onto the RBNZ. What are the RBNZ looking to do at the moment? Well, they're not looking to cut rates right now. They're looking to keep rates higher for longer. That's what causes that differential then between currencies, and that's why we're seeing Kiwi CAD in particular move to the upside here, right? So Kiwi CAD looks good to me for longs. I did look for longs a couple of weeks ago towards the end of May, and that worked out pretty nicely. And we've got the same conditions here, really. You know, this upward trend is just continuing on, and it's trying to find those levels of support and resistance. The easiest way I would do is kind of look at previous formed lows, look to see how price reacts in at those lows, and then look for those long ideas. So at the moment, trading around 84.50 Kiwi CAD. What I would be interested in is if price kind of came back down towards that 50 MA, try to make new lows, fail to make new lows, and then look for your opportunity. So very much like what we had down at this area here. Price makes a new high, but then it starts to make lower highs and lower lows, and then it fails to make new lows down through here. I think that's really important when you're looking to be a buyer of a market. Failing lows basically means that sellers are starting to give up, buyers are starting to take over essentially at that point, and that's when we can get some really good opportunities. You know, exactly why I looked to buy back in here on the 21st of May. We had a breach of that trend line, and the market was failing to close below the previous lows that were being formed in the market, and then we had that little bit of a move back to the upside. But yeah, really like Kiwi CAD, Geoffrey. I think that's a good place to be. Pound CAD is an interesting one, isn't it? Because although there is the idea of being a buyer of the pound at the moment, we do obviously have the general election coming up fairly soon, and the pound is going to be swayed on UK elections essentially. Now, I've actually just bring back in the Twitter here. You can see I've actually just put a little bit of a note in there. Actually, if I go to Bloomberg UK, you can see just through here at the moment, you've got Labour Party retains a 22-point lead over Rishi Sunak's Conservatives. That was from yesterday. And basically what we're getting at the moment are all the different polls now. And this is what will happen when we come towards the US election as well. You'll start to see all these polls. They reckon that some polls are more reliable than others, but polls are just polls at the end of the day. They're not concrete evidence that anything's going to essentially happen. We've seen in the UK now that Nigel Farage is now going to be running for Reform UK. How that impacts the market, we'll have to wait and see. But the UK dynamic is going to start to change. It's going to start to shift. It's going to become a little bit more difficult going towards that general election. So I think if you are looking at pound markets, I would probably be looking at pound markets more short term than I would be looking at pound markets over a sort of a long term period, if that makes sense. But yeah, pound CAD, I like the idea of being CAD short at the moment. We've seen a large dip in oil prices as well. We're down sort of 4% yesterday, down nearly 2% on the day today. I'm liking this $72 level. I've got an alert just set around $72.10. So, again, we're kind of adding that sort of correlation here between dollar CAD prices and CAD weakness here at the moment. So oil prices moving lower, but I quite like the idea of being a buyer there at 72.30. So I will see how price dynamics are towards that level there. Azalano, we're going to take a look at dollar yen. So yeah, let's look at this yen dynamic at the moment. We're getting a lot of yen strength in the markets. Ironically, the VIX as well starting to bubble away a little bit here. So the volatility index starting to rise a little bit. That can attribute to some safe haven sort of trade, and that can attribute potentially to this yen dynamic here. Now, there are still murmurs that the Bank of Japan could be looking to hike interest rates. So that, again, can kind of play into the idea of a little bit of yen strength. If we're looking at dollar yen, where did it kind of finish trading up towards that 157.70 handle, which were kind of these highs that developed back on the 30th of April. I was looking more towards a move up to 160s still. I still feel like there was a good opportunity to see price move towards 160 before seeing a little bit of a move down. And if I'm looking at dollar yen, although the overall trend is higher, what doesn't appeal to me at the moment is the fact that although lows are getting higher, essentially, if this does form a low around here, highs have started to kind of become a little bit mixed. You've got kind of a lower high in here, higher high again. So maybe the dynamics are starting to shift here slightly for the yen. And if we do start to see more sort of concrete evidence that the Bank of Japan could be looking to hike interest rates, then that's going to, again, give you that differential between most of those central banks. So, for instance, CAD yen, good shorts on CAD yen I feel at the moment, even potentially euro yen. If we're expecting the euro or the ECB to cut interest rates, then maybe even euro yen could be good solid plays at the moment. We can see that that's old analysis on there. We can delete that. We're still technically in that upward trend, but we started to kind of find sort of lows in here, failing to make new highs. Again, really good sign that the market is not going to continue to push on at that point. And that's what you don't want to see if you're a buyer, right? If price fails to make new highs, that's not what you want to see. Now, last week we were actually long CAD yen. If I just go into the 4-hour time frame, I actually held longs in from these lows in here. So pretty much long in there. Target those previous swing highs, stop losses below the low. So ended up having quite a nice position on this in the end last week. Nice little move to the upside there. And then that 115.50 got tagged and we started to see a decent move to the downside. Again, is this a little bit more of that differential in central bank analysis play at the minute, right? We're starting to see that sort of downside move. But you can see we've just clipped the lows here. We've just clipped these swing lows down through here around about that the 15th of May, around about that 113 handle, and the market's starting to just give a little bit back now. So maybe there's a potential sort of mean reversion play here. If you are a day trader in the US session now, we could be looking maybe at something like that with a move back up into those levels of resistance. So we could be looking at a little bit of a play there. And if we go take a look at dollar yen again, we can see a very similar sort of setup. Just go to the daily chart. We're coming into these daily areas of support and resistance now. So potentially we're going to see a little bit of a yen bounce here. Potentially we're going to see a little bit of this sort of relief to this recent drop. And if we do, you know, we could be looking at some mean reversions. And when I say sort of mean reversions, I don't shoot for, you know, the market to come all the way back up into 160 at that point. We'll make sensible decisions. You know, if there's a low in here at the 4-hour time frame, maybe price will come there before it continues to push to the downside. So what I would typically look for here is be watching this 15-minute time frame now. I'll be looking to see if there's any kind of ideas around getting long. So let's say price here, for instance, is still kind of making lower lows, lower highs. But if we get kind of like a rejection in and around these swing lows again, it could be a sign that there's a change of trend. And then if it breaks trend, you could look to potentially have a little add in there up towards that 156 handle. Okay, so you can play the kind of long-term daily chart with short-term price action essentially in there. So hopefully that made sense. Dwayne, how are you? Gold, please. Yeah, let's go take a look at gold. I've done some analysis on gold a little bit earlier today. So seeing the metals really tank the past couple of days. And if we take a look at gold, we're just kind of trading within this minor trading range at the moment. I can see sort of highs around this 23.62 handle down towards these swing lows here at 23.26. So I'm actually thinking about playing the range here at the moment. I've got a level set up on my charts above. So if I just go down to the 15-minute chart, so essentially what I'm kind of explaining here is that you've got this kind of movement between these two levels. Price may be range bound. You know, it could be range bound because we've got NFP coming up. It could be range bound because there's lots of volatility in terms of central bank data coming up this week. So for me, I quite like the idea of trying to play that range essentially. And if I go to the 15-minute time frame, we are starting to break these previous highs within the market, right? So we've just started to break these. So is there a potential sort of move here? Now, I was kind of looking for the head and shoulders play. So what I mean by that is we can see that price is obviously coming to the level, made a lower high, lower low. And then usually if we get kind of like an equal high and then price comes back down again, I'd have been looking for sort of long entries around sort of 23, 29s with the idea of being a buyer back into essentially this volume that was created. Again, volume can be a magnet for price. So if I was going to buy it up to anywhere, it'd be up into this consolidation that formed, because that is an area of volume. So although price is now making the new high, I don't feel like that is still out of reach essentially. What I would be looking for now, I'll be watching this 15-minute time frame, because if I was starting to get sort of candles that start to kind of pull back a little bit, you know, I'll be looking to see how the market reacts. What you don't want to see is a very sharp decline here, you know, back down. That wouldn't be ideal for me. For me, I'd like to see a very slow pullback, very kind of labored pullback, and then look for that kind of opportunity from there. But we are getting the sort of ideas that we could kind of change. Joffrey, do you place your trades with pending orders? How many pips is usually your stop loss? It depends on the instrument at the time. You can see I've got an ATR down towards here as well. So I like to use ATRs, swing lows. So, you know, for instance, here we've come into that kind of daily level of support. really, I kind of try and identify where my safe stops would be. So safe stops would be sort of below this swing low here, around about that 23, sort of, what is that, 23.14s would be a really safe stop. So then I try and imagine where I would get in, right? So I always try and look at my risk reward ratios and how would I build a position into this market. So let's say, for instance, I got in at the perfect price, which would be down towards this lows. The safest stop, like I said, would be below that kind of swing low there. 23.14 would be the sort of safest stop. And my target at the moment is around about 23.43, right? In that sort of volume zone. You know, I could try and stretch it to sort of the middle. I could try and stretch it to the highs there. So best outcome, getting in at the very best price would be around about a 2-to-1 using just kind of ideas with stop losses below the swing lows there. But if I want to try and get a tighter entry, this is why I use the sort of lower time frames to try and get that lower entry. Now we've broken that high. If we were to start to see a pullback here on this 15-minute time frame, we'd actually see a downward trend form on a lower time frame. So for instance, the 5-minute, right? So you can see on this previous retracement phase here, the market started consolidated, making higher highs, higher lows, right? Then it broke that, moved down, and now we're starting to see that same pattern again, the market making higher highs and higher lows. So I need a pullback. So ideally what I'd like to see is the market make kind of lower lows, lower highs, maybe into that support level, and then it break that. So I can look to try and get long on the break, essentially, have a tighter stop loss with a move in there, and then try and capitalize potentially on a little bit of a move higher. So that gives me a similar risk reward ratio to those kind of previous moves, but I've been able to kind of narrow in a little bit on that move there. There's not an exact science to where you should be placing your stop losses, but essentially you want to be placing your stop loss in a place where you know you're wrong. Okay, that's the whole idea behind it. It's where is my idea sort of invalidated, and it's probably going to be invalidated when it takes that low out. And then if we get to this price, do I see a similar kind of price action happening? And then if I do, you know, the market's given me more information. I've essentially paid to get more information, and that I can look for maybe a better opportunity to get involved in the market. Okay, hopefully that makes sense. But essentially, you know, there's no exact science to it. I would say, you know, you should put your stop in a place where you're comfortable with placing your stop. What you don't want to do, obviously, is move your stop loss at that point, because then you're increasing risk into the market. Okay, and that's why when you're sort of trying to take these day trading moves, you should try and trade at a lower risk. I know it's very hard to do because people want the money and things like that, but you're trying to get an average over a long period of time rather than quick moves. So I like the idea of volume here on gold towards that sort of 23.44 and above. Can we find that as targets? You know, let's see if we can get a bit of a pullback here. You can do other things as well, like, you know, you can maybe use a fib. I don't know. Maybe if we look at sort of a fib move from, let's say, that low. I know it's a bit dodgy to put it on the current high, but maybe you could be looking at entries towards the 38.2 with your stop loss below the low. Try and target 127 extensions or that volume zone in there, right? So we'll have to see where that finishes yet, but you could use something like that. The silver trade is struggling. It's on the struggle bus at the moment. It's not really making a move, but we'll go take a look at that in a second. You're welcome, Dwayne. Hi, Ratish. Hope you're doing well. How often do the lives happen? Every Tuesday and Thursday. So every Tuesday and Thursday, 2 p.m. is when we have lives. We do have the odd sort of live if there's some big data drops as well, but don't have any of those this week. Yeah, your take on silver. Yeah, so like I said on, I know I keep bashing Twitter on you guys at the moment, but if you do want to come take a look, I did have a little go on silver earlier. So you can see here, just taking a stab at silver longs here, low risk. Price seems to be finding support 29.60. So let's have a little look at silver. Now, silver, obviously, very aggressive drop. You know, I'm kind of feeling the same with silver as I am with gold at the moment in terms of there's volume up here. Is the market going to try and sort of mean reverse back to that volume? Now, silver prices have dropped. You know, I actually went long silver yesterday, managed to grab a little bit out of this. You know, if I look at the sort of low here, we kind of dropped below it around 29.90 yesterday. So if we go back to yesterday, we kind of dropped below it, had this little pullback in here and then broke out. So I managed to grab some longs in here, took profits at a high, okay, because I thought that if price was going to reverse, it could reverse around that point. And then the market's obviously continued to push higher here. But then we've dropped. We've had a big rollover today in silver. For whatever reason, you know, I actually don't know why we've had that big move to the downside there. I haven't actually sort of researched too much into it at the moment. You know, if we look at it from a higher time frame perspective, we could argue that we're in the sort of pullback phase on a weekly chart now. So maybe we are seeing that sort of downward trend play. And if I look at it on the 4-hour time frame, you know, we came up into these swing highs and everything looks a bit different in hindsight, but the market kind of double topped and we're getting this kind of lower high, lower low pattern kind of forming. But essentially, looking left, I can see this little area in here where we've had strong buying in the past. I'm looking to see if these buyers essentially, are they going to hold? Right? Are they going to hold their position here, or are they going to start to liquidate their positions? If they start to liquidate their positions, then the market could go down towards that weekly high, right? That weekly previous high, which is in and around this kind of $28.50 handle, right? But if we hold here, do we start to see a little bit of a bounce back up into these kind of 4-hour highs here? You know, some people may say that you've had sort of 1, 2, 3 pushes already. You know, is that going to be a little bit of a pullback now? So what I'm essentially looking at is my lower time frames again. What's going on here? You know, is there any opportunity to be a buyer? I managed to go long 29.74, so I'm pretty much at break even right now. Price trading around 29.78, and I've sat in this for a while. But essentially, I got long because of this pin candle here. So I was watching the market, and I was watching to see if we were to get support around this area, you know, how would that kind of shape up? And, you know, I very much like the double bottom pattern. You know, I feel like if price fails to make new lows, there's good opportunities to be a buyer. So, yeah, got in around about that high there. I got in a little bit earlier than that. So around about 74. Just around here. Stop loss on this one. So, okay, like if we're talking about stop losses at the moment, you know, where would an ideal stop loss be? So my target is up towards this volume up here, and I've also got a little note to potentially take some off above that high. So I didn't actually get my fill. I'm taking a little bit off there. Now, I've got in really low risk, so I'm not risking loads of capital on this because if you look at the conditions, it's bearish, right? So why would I go and put like 1% risk on that? Just doesn't make sense to do that. And where am I invalidated, or where am I wrong? So, you know, looking at the bigger picture, that is where I'm wrong down here, really speaking. Below that swing low there, 29.30 is where I'm really wrong. So if we were to kind of break into new lows here on the 15-minute time frame, I could arguably get out for a little bit of a less loss there, kind of just cut my losses, because, you know, the conditions are changing at that point. We're then going back into potentially making new lower lows and lower highs. But essentially, I'm just waiting. You know, we have got dollar data in about half an hour. Maybe that could shift things. You know, I like the idea of being long silver kind of mid to long term. So any kind of drops in the prices of silver at the moment, I'm happy to try and be a buyer of. So for me right now, I'm quite liking the idea of taking a stab long there. Like I said, if it fails and it breaks through, that's why we've got risk management in place. You know, I'm not going to cry about it. Just wait and see if there's another opportunity, or wait to see if my bias is wrong. Move on to the next thing. You know, maybe there might be another opportunity. Usually I like to use a couple of warning signs, you know, before that. So I've talked about this in the past. If you like using fibs, there's a good sort of warning sign that you can use, and that's the 23.6. I'm actually going to turn off all of these middle ones and those extensions just so you can see it. So if I was to get a close below the 23.6 here, I'd be looking to probably exit this position as well, because I just don't feel like the momentum is with any kind of upside here at the moment. So that's what I'm kind of looking at. If we look at this kind of move down that we had in the market, so this recent sort of push lower, closed above the 78.6, which is just the 23.6, but flipped. So that to me is a good sign. I think this is a positive sign. I think the market could continue to push higher here. I'd like it to break through this kind of $30 spot 07 handle, because that's where the low volume is. So I feel like if we break that high, then there's more of a chance that price is going to come up into this sort of $30.50 handle. And that's where I'll look to get, you know, some out of the position at that point. That would be a 1.85 return on that move there. So yeah, that's what I'm kind of eyeing up at the moment, to see if we can get that little bit of a push. So it's just whether we get it or not. It's just whether we get it or not. If we go take a look at the US dollar index today, having a little bit of a sort of push up at the moment, but dollar index and metals have not particularly been following a sort of decent correlation at the moment, whether that's because of sort of spending from other countries into, or investments into gold and whatnot. That could play a big part into that. And obviously the dollar's very weak. I'm not convinced that the dollar is a weak currency just yet, although, you know, we are getting this breakout here, so I might have to flip my bias on dollar at the moment. You know, I'm still technically short in the US dollar across most currency pairs at the moment, because from a technical point of view, it doesn't meet the idea of being a buyer at the moment. But I still feel fundamentally the US economy is still doing pretty good. I think there's actually a very good risk that the Fed could hike again. And I think if it does, then there's going to be some big upside in the US dollar. Think of all the carry trades that the market would be looking into. You know, if we look at stock markets at the moment, you know, are they getting a bit worried? We're starting to see a very sort of negative stock market right now. The volatility index has increased. You know, there's a little bit sentiment shifting to risk off. And I think, you know, I don't quite like that at the moment. I actually feel like the dollar's a little bit undervalued here. If we go take a look at bonds as well, bonds are starting to come back down. Again, kind of fueling that US dollar weakness at the moment. But we've got an important point here. You know, if the US 10-year starts to breach down towards this kind of 4.35% level, breach that to the downside, then, you know, maybe I do need to switch up that mindset on the US dollar right now. Or at medium term at least. Info, good day, sir. What time frame are you working on? I use the higher time frame, so sort of daily 4-hour charts for my kind of levels of interest, and then I kind of flip to the lower time frames to try and get a little bit tighter entries into those moves. So that's what I'm kind of looking at the moment. Silver not playing ball though. Silver's starting to drop a little bit here, starting to get that break below the 23.6, so might be able to close that early. How long have I got left on that candlestick? We've got about 5 minutes or so. Gold's starting to really pull back down towards that level now, so let's have a quick flick over to gold again. Now gold is also very interesting, right? You're welcome, Ratish. Thank you for the question. When we were looking at gold, let me just get a banner up. So when we were looking at gold, what's the other kind of theory around gold? Where could prices of gold go? And if I look at the weekly chart, I'm a big ambassador of the weekly chart, and we can see price obviously failed to create a new high here. We started to pull back a little bit. We've got all these lows down through here that could be support around about that 2300 area. So there's a decent risk that price fails to hold here at the moment, and then it just kind of falls through and falls down towards that weekly level of support before seeing the move higher. So I wouldn't be surprised if we saw that at all. But obviously, there's a good sort of level around here at the moment. Is this going to be a bit of a head and shoulders? We've got that 15-minute break here, but we're starting to see sort of decent downside, 50 MA being a little bit of resistance here. So we'll see if we get any kind of buying coming back in. Looks like the US opened T30 and just tanked, followed those aspects then. Actually, very close here to breaking those lows here on the 15-minute chart on silver now. So like I said, if we get that close there, I'll probably look to reposition out of this, take my stop, and just go and have a little look at something else. But what I don't want to see, obviously, is price just do that. But like I said, low risk move. We're trading from that area of support in here. And if it does break that support down, then the market's going to go and try and seek that other area of support, which would be on that weekly time frame, all these kind of highs that developed around about $28.50. Still feel like there's good upside in silver midterm. If we go and have a little look at the monthly chart, we broke into new highs. I still feel like $35, $37 is still a good level for targets overall. So, we might just get a little bit of a drawdown from last month's price action. If we have a little look at it, I like to look at maybe around the 50% mark sometimes of these moves. And the 50% mark, fairly close to where we're kind of looking at right now. So we'll just see if that can hold. If that doesn't hold, then we'll see if we can get like a lower price move there. Maybe we can get a bit of a better entry. Okay. Just watching gold in at that level. I just want to see if any kind of buyer step in. Looking heavily weighted bearish right now. Wonder if this is some positioning ahead of the move. Let's have a little look. What's the consensus? So job openings, forecast 8.37. Hi, John. Do you ever have days where you both long and short setup present itself? How do you go about executing between the two? Yeah, definitely. I think if you have kind of like a bias on the day, you need to know when you're wrong, right? And you're going to be wrong a lot, okay? This is the nature of trading. You're going to be wrong a lot, and you've got to come to terms with that very, very quickly, okay? And it's not a personal thing, right? I think we very much take it personal when we lose, but it's really not a personal thing. You've got to think you're trying to battle this market that's been around for a very long time. There are very big hedge funds. They're very, there's a lot of professionals within this industry. And you just have to come to terms with that. You're going to be on the wrong side of the market a lot of the times. What you're going to have to do is just try and play your edge as much as you can and try and play it to the best of your abilities. Okay. That's what I try and do. So that's why I look to trade from highs and lows, and I look to try and find those volume levels, and I don't risk too much. I think the best traders are the ones that don't risk too much on a bias where they think they're right. Okay, so there's been examples of this in the past where I've been guilty of trying to, so like the market's been moving down and I'll just try and average in. It's like silver at the moment, right? So silver right now is just closed below that 15-minute level of support, right? So what is the chances of this now making it to full target? It's very, very low, right? It's very, very low. For that to turn around now, I think is a little bit low, okay? Although we've got better prices, essentially, it can be very easy for somebody now to see this zone, right? And just go, I'm going to buy in again. Okay, and tell me if you've also been guilty of this in the past. You go, I'm going to buy again because that has to be the low, because it's coming to this zone of support, right? And zones of support are just areas where price has been before and reacted from. We have no guarantee of anything going in again. But what I see in most of the problems I see is, as price comes down, people go in again and they risk again, and like they keep going like this. So if it comes down a bit more, they risk again, and this is where you get punished, right? I would say if you have a bias on the day, so my bias right now is the fact that we've moved down all day, prices moved away from the average. For one, we've got this daily area of support and 4-hour level of support. I'm looking to see if that will hold. Where am I wrong? I'm wrong below those 4-hour lows there. So I've put an appropriate amount of risk on for that. And if it gets stopped out, I'm not going to try and get in long unless my conditions get met again. I'm not going to try and, if price starts falling again here, I'm not going to try and buy on the way down. That's just, the market's not agreeing with my bias. It's not a personal thing. It's just the market's not agreeing with my bias. So move on, have a little look at something else, maybe walk away from the chart so you're not trying to stare at it, right? Yeah, and just go from there. I'm not trying to look into that. I like range trading. So the idea of being both long and short really resonates with me. A good example of this is dollar CAD at the moment. So I bought dollar CAD down at 136.23s, got out here at 137.32s, but I was also short back here on the 23rd of May when price came up into these swing highs. And a range is, very good because you have to flip that bias. You've got to be very good at not getting married to your fundamental bias. Like I said, fundamentals are more medium to long-term situations. So, you're going to be looking maybe at trading your daily charts if you want to do that. But if you're trying to take some income out of the markets, then you've got to be very aware of the news, but maybe take it with more of a, okay, well, that's the news. I have a long-term bias, but today the market's down. I'm going to trade that side of the market until we come into decent area support. Aussie's another one. I actually was going to go short today on Aussie, but I didn't because mainly I missed the setup. But I went long Aussie last week. So, and my idea, I've been talking to you guys for a while, is I want to be a buyer of the US dollar, right? But I understand that just because I'm a bit more of a dollar bull doesn't mean that every day I'm going to come to the chart and it's going to be a buy. Aussie US dollar here, for instance. So I went long down in this area here, very similar setup to what we talk about all the time. Market comes into this area here, it rallies, it kind of created this little pin candle situation. I went long on the pin candle, stop losses below the low. And, that was my overall target here, 0.66, whatever. But I actually got out around this level because it was that area of volume. So like I talk to you about all the time, area of consolidation can be volume where you see some selling come back in. So that was my kind of long play in there. And I saw price hit my alert yesterday in here. So I was watching for the same conditions. The market came in, hit that level, dropped away. But there was no sort of lower high to work from, lower low situation to work from either. the market is just kind of, you know, holding at that point. So what I really wanted to do is wait to see price come back up, and I just missed it because it was overnight. So you can see here that was 1:30 p.m. for me. So, you know, it's the Australian market. The likelihood of me missing a trade on Aussie is quite high. So, but you know, I would have liked to have seen maybe a move in here, but that was 6 o'clock. Wasn't at my charts at 6 o'clock this morning. So yeah, but that would be kind of what I'd suggest about if you're trying to trade biases. You kind of put it to bed if you're trying to make sort of day-to-day profit, I would say. If you're looking at long-term stuff, then great, you know. Look at a market that's depreciating in terms of interest rates. So CADs, what's a market that's doing well with their interest rates at the moment? Aussie, you know, Aussie CAD longs, probably pretty good at the moment. CAD Swiss is, like I said, looking pretty good. CAD Yen's looking pretty good. I was actually looking at CAD NOK. Norwegian krone is doing pretty well at the moment. So if you look at CAD NOK, you know, that's pretty decent. Market came up into these recent swing highs there. But again, this is more of a long-term play. If you look at it on the weekly chart, it came up into some previous weekly highs and started to drop from there. We're now back at the lows. You know, does it make sense to sell here? No, it doesn't. So even though the bias here could be short, does it make sense to short there? No, because you're at support and your risk reward ratio is just gone. If price kind of pulls back higher, maybe back into those highs or even those lows there, maybe then you can start looking at a position in the market. But yeah, you know, that's the way I kind of look at it anyway. I went on a bit of a rant there, so hopefully that didn't go too off tangent. Okay, so hopefully I covered this. Long, short versus vice versa. How do you deal with the psychology around this? Again, just try not to take it personally. Try not to take it personally. You know, you're going to be wrong in the market. You know, I can see silver's just still going. It's still kind of moving to the downside there. So it looks like I'm going to be wrong on silver. But, you know, so be it. Take it on the chin. See if there's if we get another opportunity form around there, great. If we don't and the market moves lower, we move on. But I don't believe in, like, I could cut it early. You know, that's also a good thing to do. I feel like if you feel like you're definitely going to be wrong, cut it early, because there's always an opportunity to get back in. So you're just saving a bit of capital there. So, you know, I'm looking at silver right now and I'm thinking to myself, you know, how likely am I going to get stopped on this? Well, it's looking highly likely. So I might exit my sort of position, save myself a decent bit of capital there before looking at another opportunity. But yeah, knowing when you're wrong is difficult though, because you don't want to necessarily cut your trade too soon. But a break below that low on the 15-minute is definitely not ideal. But I'm just watching gold. I think if gold breaks lower, then silver's going to also match that. So I'm just kind of keeping my eyes on that. Joffrey, can you take a look at Aussie Kiwi, please? Yeah, absolutely. So a little look at Aussie Kiwi. I mean, this is perfect for range plays. You know, look at that weekly chart all the way up into those weekly highs. Daily chart just reverses at that point. Really nice sort of move down in there. I mean, if I'm looking at this weekly chart, you know, where's price going? And immediately kind of look towards this sort of 1.06 handle where we've had support in the past. Just go to the visibility on these. Don't know why the visibility is off. Didn't mean to do that. There we go. So yeah, decline here in that downward phase. You're kind of in that phase now. Got a lot of room to the downside here. I mean, look at the 50 moving average bounces on this one. But again, if I look left, where have those 50 moving average bounces kind of come from? Previous highs on the 4-hour time frame. So the market's come into the previous highs. It's failed to make a new high. And then we've got the move down. Again, we've created a high, failed to make a new high, failed to make a new high. Prices, converted a move to the downside. So I'll be looking for something very similar, to be honest. If you're looking to get short this market, if we pull back, it makes a high. Does it fail to make a new high? Great. I can look to get on the back of a move potentially down through here. So Aussie Kiwi, to be honest, looking pretty clean right now. Another market that I like to see in terms of ranges. And one of those is Euro Pound as well, although Euro Pound is consolidating at a low, which I don't like to see if I'm going to be long from a range. Low essentially. So we've got this sort of 0.85 handle at the moment. And, they might be playing the sort of downside move here in terms of the ECB if they cut rates. And if the UK kind of keep their rates a little bit higher, are we going to potentially see a little bit more downside to Euro Pound, potentially. But usually I quite like the sort of range plays here. And we've consolidated, rallied, we're consolidating again. Yeah, I'm just not fully convinced on any kind of upside on this one at the moment because we're just kind of consolidating at a level of support and resistance. If we had kind of like a big push away, then a pullback, then yeah, I'd like that. But yeah, not really feeling that one, to be honest. There are some volume levels up here though that I like the idea of being tested. So we'll see if any kind of price action comes from Euro Pound as well. Thoughts on Berkshire Hathaway glitch? Yeah, mental, wasn't it? Absolutely mental. That. I imagine. Sorry, I'm just watching this alert. Yeah. Yeah, I imagine it would have been a bit of a shock, wouldn't it? To wake up and see your stock market going down. I mean, Warren Buffett would have had a decent shock at that. Did this affect the general overall market? I don't really know. But the glitch, obviously, very interesting. I actually was discussing this morning with Jordan, my friend, and we were talking about the fact that those kind of whale events that happen in the market where you get these kind of weird happenings, it's like when oil went to $1, but obviously that's very different because this was a glitch. But a lot of traders actually got involved long when it went down 99% or lost 99% of its value. A lot of traders actually went long on it. And there was a story about a guy that kind of made $10 million off the move, but then the New York Stock Exchange reverted it back. But apparently price continued to move higher. I actually haven't looked at it today. I know it'd be a very very sort of big. Here we go. Yeah, scary move that. It's kind of come back and reverted back to where it sort of opened last week. But yeah, we did see this kind of increase higher. And apparently people that got long here and got stopped, the New York Stock Exchange didn't revert that back. So, what does that tell you in terms of manipulation? Yeah, silver still tracking a little bit lower here. you know, it's not looking particularly good, but we've just got the data coming out now. So let's have a quick flick on that, see if the data will be beneficial for us, you know, in this particular trade. Let's have a little look. Seeing slight rebound right now, but don't know what the data was. Could easily flip back to the downside. Let's give it a little refresh. So a bit of a drop, to be fair. A significant drop, 8.06. So we're starting to see a little bit of dollar weakness off the back of that short term. Whether that will hold or not will be different. I was looking at cable today. So I see a little bit of a push higher in the short term. I reckon that'll be very reactionary there. Very similar to Aussie US dollar as well. Kiwi was quite interesting to me. We're very close to the 0.62 handle. We kind of tested it overnight. And this is a big level of resistance on Kiwi US dollar. You can see significant resistance back on the 8th of March and on the 22nd of February. So I wondered if we would get a similar kind of reaction there, where the price would kind of come in, sort of reject it and continue to push to the downside. So I'm quite eager to have a little look at that one. Let me just go to the weekly time frame. You can see that it's also a weekly swing high as well, which, again, I like to be short from highs, long from lows, you know. So this is like a good area for me to look at getting involved with the market. But the 4 hours got to come back up and try and fail, because at the moment it's making higher highs, higher lows. So I'm not really interested unless we get another kind of rejection up in here. So if price pulls back up into those highs, essentially, and then the 15-minute starts to turn over, okay, so if it kind of comes in, starts to turn over, then I quite like the idea of being short here. Again, you know, where's the risk? Where's the reward? So if I look at it in terms of where my risk is going to be, it's going to be above this swing high, essentially. That's when I know I'm potentially wrong in the market, unless we get some kind of false breakout pattern. But if the price does sort of go short from here and I put my stop loss above that high, where's the sort of targets? Well, you know, daily swing lows there, 3R away, potentially even 4R away. We've got this volume area down towards this area, or even back towards weekly lows. So that's why I like trading from these kind of big areas, from daily highs, weekly highs, you know, even 4-hour highs and lows, is because you get good risk reward ratios, and especially if you can get onto the right ones, you know, they look pretty, can be pretty decent for you. But you got to be prepared to be wrong at those points. So we are starting to see a little bit of a recovery from the metals. How long that will stay that way, I don't particularly know. Silver has come up. I'm nearly back to break even now on silver, but I, again, don't know whether that will hold or not. But yeah, maybe the news has been a catalyst that can help the trade out a little bit, you know, see if it does get a little bit of a mean reversion back to the upside in the short term. But we'll have to wait and see. Right then, guys, I think I'm going to leave it there. We've been running for just over an hour now. So yeah, I'm probably going to leave it there. Thank you to everybody that came and supported the stream today. I really appreciate that. If you could leave it a thumbs up, I would really appreciate that. So yeah, thank you very much, guys. Have a great rest of your trading week. I will speak to you again on Thursday. We'll chat a little bit about NFP, and yeah, we'll go from there. Cheers, guys.